Now, the very first strategy that I'm going to show you is what is called the pullback strategy. And I use this strategy very frequently. I don't use it very much like the strategy that I'm going to show you at number 4, but I use this almost every time, right? It is called the pullback strategy. And how the pullback strategy works is that if the market is moving, like I always say, it makes impulsive moves and then it makes pullbacks and it makes another impulsive move, right? And your job as a trader is to identify if the market makes a pullback here, where is this pullback going to end? And that is where you want to buy, because you are expecting prices to push to the upside, right? So you want to know exactly when this pullback is about to end. That's your job. That's the only thing that you're going to go to the market to do. Identify when this pullback is going to end, and then you are going to place your buy trades right there. So how do you identify when this pullback is about to end? There's different ways that you can use. You can use percentages. You can measure this move from here to here, and you can expect the price to pull back up to like 30% or maybe 50% or more, right? Or you can use tools like the Fibonacci, right? So the way that the Fibonacci works is that it measures this move right here, and it gives you different levels like the 0.71, 0.61, 0.50, which is regarded the golden zone. We are going to talk more about that later. So your number one job is to identify this 1, 2, 3 move, right? So you want to see the first impulsive move, you see the pullback, and then you see another impulsive move. If you have ever been to any of our courses, you know that we always talk about how to identify this 1, 2, 3 move, and now you want to wait for this pullback, right? So there's different ways. As I said, you can use the Fibonacci, you can use what is called the percentages here, or else you can look at these zones right here. So if you join our premium training program, you will find out that we talked about 3 types of pullbacks that you can get, right? And one of the most common is a pullback that is going to come into this previous zone here. So you want to wait for the market to come into this zone, and then that is where you want to place your buy trades, and then you expect prices to move to the upside just like this, right? So for this strategy, you will find out that there's different ways that you can identify this, but this is what you want to identify. You want to buy at least at these zones right here, right? So the win rate for this strategy is a little bit low. Why? Because it's very hard. It can sound easy here, but it's very hard to know when this pullback is going to end, because it can be a shallow pullback, it can be a medium pullback, it can also be a deep pullback. So if you buy here, if it was a deep pullback coming into this zone, that means you are going to lose money right there, right? So if you want to learn more about that, you can join our premium training program. So the win rate for this strategy is very low, but also the risk to reward is okay, right? Then strategy number 2 that we are going to use is what is called a counter trend strategy, right? So the counter trend strategy is very common for most traders, but then the counter trend strategy is one of the strategies that will make most people lose money in the market. Why? Because let me explain how it works, right? So as I said, the market might make impulsive moves, pullbacks, impulsive moves, pullbacks, impulsive moves. So your job as a counter trend trader is to know exactly when this trend is going to reverse to go to the downside. So you want to catch a big move of reversal, right? So you want to know exactly when this initial trend is ending, right? So what happens most of the time is that when people are trying to trade this, they will try to trade all these times, and then they'll keep losing money until the market will actually reverse, but it will happen maybe after you lose 3 or 4, 5 trades, right? But then there's a better way that I think if you can use that, you can maximize your chances of winning, right? So you want to be able to read the trend. So you read the trend by seeing, as I said, impulsive moves and pullbacks, right? But then you want to identify these zones. It's very important to know exactly which zones to identify here, because for a counter trend to happen, you want to see the market, because this is called a higher high, this is called a lower high. So you want to see the market moving to the downside and breaking below this zone here. So people who believe in market maker methods, they call this a change of character, right? So they call this a change of character. So this is when the market breaks below its previous low, and then you are probably going to see a pullback again back into this zone, and then you trade expecting prices to go to the downside. Though this is where you would be looking to sell your market, right? So this strategy is the second strategy that you can use. And for this strategy, I think it's better for you to be able to read this trend correctly, so that you know exactly when the change of character is happening. The win rate for this strategy is low. Why? Because imagine all the people who were selling here looking for a counter trend here, they lost money because the market kept going to the upside, right? Up until, if the market drops, if it drops like this, right? So up until these people start trading, this is when they make money. But the win rate for this is low. But as you can see, you are trying to catch the whole move, so the risk to reward is very, very big, right? So you can get 3 to 1, 4 to 1 risk to reward ratio on this one, but then you understand that the win rate is going to be very, very low. This is the second strategy, which is very easy for you to use, right? So the third strategy that I'm going to show you here is called the range bound, right? So it's called the range bound. And what is a range bound strategy? A range bound strategy is a strategy that you try to capture the bottom or the top of a range, right? So if the market is moving to the upside like this, and then it starts maybe doing this, so your job as a trader here is to try to either buy here or try to either sell here, so that if the market drops here, you catch this move at the start of this range, right? And then if it breaks out here, right, you can even get a bigger move to the downside, right? So this is what is called the range bound strategy. So you want to find a market that is ranging, and then you want to mark out this zone, and then you want to say, okay, if the market comes back into this, you believe that this market is discounted, this is a good way, or this is a good point for you to buy. So you would buy at this point, put your stop loss below here, and then if the market goes, you can take profit on the top of this range, or if it breaks out, you can even get a bigger move after, because this breakout will build the momentum for the market to push up to the upside. Because think about all the orders that were being created, all the buys and sells that were being created in this zone, right? So you know that usually if the market breaks to the upside, or if the market creates this momentum and it breaks, it will likely create a bigger move, right? Which leads us to the fourth and my favorite strategy that I think everyone who is looking to build their first profitable trades, you need to look out for this strategy. It's very, very easy, right? So which is called the breakout, right? So the breakout, what you are just doing is you are just marking major levels of structure, and then you are waiting for the market to break out of that structure, right? So if you think about it, as I said, if the market is moving to the upside, right, it can move like this, right? And then it does this, and then it goes all the way up again, and it does this again, and it goes all the way up, right? And what if you think about it, you see that at these zones, right, after every of this, if the trend is going to the upside, that means after every breakout here, you get a bigger move to the upside, and then after every breakout, you are getting a bigger move to the upside. So your job here, if you want to trade the breakout, is to know exactly when the market is breaking out. And let me show you what I mean by this. So if the market makes an impulsive move here, right, and it makes a pullback, however this pullback looks, right, what we are waiting for here is to know if the trend is about to continue, or if the trend is about to reverse. So how do you know if the trend is about to continue? You are waiting for what is called a break of structure, which is the market breaking its previous high. If it breaks its previous high and moves to the upside, that simply means this market is trending to the upside, and your likelihood of being profitable trade is if you buy this breakout. So as simple as this, or else you can see the market which moves like this. So you can see a strong move to the upside, and you can see the market creating some sort of a range like this, and then you just want to mark out this zone and wait for the market to break to the upside, and this will create which some people will call the flag pattern, but simply for me it's just a breakout, and I will always buy here. So for the take profit on this one, I just want to measure the zone here. So if this is like 40 pips, That means my take profit is going to be also 40 pips, and then I would place my stop loss somewhere around the middle here or below, depending on how big is the account. So the win rate for this is very, very high, but then if you try to get like 5 or 4 times the risk to reward ratio, you will find out that most of the time the market will drop, and because the market is have no much volatility to move all the way like 80 or 120 pips in a short period of time. So the likelihood is the market will reverse before it goes to your take profits. So the best way here, I think, is to use 1-to-1 risk to reward ratio or 1-to-1.5 risk to reward ratio. This is one of my favorite strategies, and it's very, very easy to trade it and to replicate what I do with it, right? So in our trading course, I talked more about this strategy, how to build it using what is called the TAE formula, which you want to involve different things to build a strong strategy.